What's up, everybody? This is Jimmy with Trading Decoded, and it is Monday, April 7th. Historic day, if you will. Lives were changed today. Now, I picked that title today because the market did things that I've never seen it do before. And undoubtedly, I wouldn't be surprised if some millionaires were made today, and then I would imagine that some millionaires became not so millionary today as well. What I mean by that is, well, we had an insane $41 move on SPY in a single day. In fact, in about a 35 to 40 minute move to the upside. Insanity. Now, today, the market was screaming at me to not trade. And I know that sounds crazy to some of you, but I think I want to use myself as an example because I'm always on here creating videos, trying to teach you guys what I've learned the hard way most times, and what I've learned from other people who were trying to understand this business to a point where they can make it a source of income for them, a consistent source of income. And that was, the market gave me so many signs, so many reasons to consider just making this a no trade day that I decided to make it exactly that for myself. Now, why, you might ask? Well, for one, I saw the expected range for the day reach a number that I've never seen come even close to. And what I mean by that is, if you're trading on Thinkorswim, you might be familiar with something that looks like this. Now, you see that those three gold M's there, that is the market maker's expected move or range for the day. Now, it's rarely accurate, but the bigger that number is, the more expensive your contracts are going to be because the higher the expected volatility, right? So that's really what I look for in that number, not because I think SPY is going to stay within an $11 range or a $3 range or a $2 range. But if that number is small, contracts are not going to be moving as much. They'll be cheap. And if it's big prior to today was 4.5, 5. I don't even think I've ever seen it at 6, let alone 11.5. So my contracts at open were just over $7,000 a piece. Now that's a $35,000 trade. Now, of course, people in my community are like, Jimmy, why don't you just scale down? Why don't you trade SPY instead? And that got me to thinking, well, the reason I'm not going to do that is simply because my trade rules and my trade plans revolve around very specific position sizes and everything else. And there's reasons for that. But it got me thinking, well, if I'm willing to break rules to make myself feel more comfortable trading, then what good are rules, right? If you're just going to bend them or break them whenever, then why have them at all? Okay. So the other thing is that if you decide to change your strategy or play a smaller position size than you're used to, just because the cost of the trade is more than what you're comfortable with or used to, well, let's say I go from 5 contracts to 1 and I get the move that I wanted to get, and I'm only up, 20% of what I'm used to. Do you think I'm more likely to take my profits at that point? Because suddenly the cost of the trade no longer matters, but how much you make on the trade begins to matter, right? Because in your head, you're like, man, on this move on any other day, I'm up X amount of dollars and I'd be happy taking my profits. But the problem now is the cost of the trade changed your position size. And then when we get to your profit target, you're 20% of what you normally are. And of course, our brains go to say, well, this isn't enough. This is not what I'm used to, what I'm comfortable with. I'm going to hold this longer. In some cases today, that would have resulted in more of a win, but depending on when you did that, it may have produced a massive loss, right? Or a loss, nonetheless. And so today, for me, even though I felt pretty good we found several trade opportunities today, I just didn't take them. I was very clear about that before the market even opened, and I just explained to you why that was. Now, the other thing I'm going to show you is the trades that we found. And I want to show you that if you can get past the fact that the market is in a weird phase right now, one that we've never seen before, and very volatile, very expensive, then the trade setups still work. Okay. But what I'm trying to get you to understand is that if you don't feel comfortable about any part of the market, you probably shouldn't do anything about it, because then you're just gambling, and we don't like to gamble. So let's go ahead and take a look at some of the trade opportunities we found. I didn't take any, to be abundantly clear, like I just told you, but leading into the open, same rules apply. I told everybody, if we get below this orange line on SPY, this orange dotted line, we should head down to the next one. Now, unfortunately, that happened before the market opened. So the next line down became the reason. Same thing with the Qs. Originally, we wanted to get to below the blue line, head down to the next orange line. That all happened. And then we said, because this is the low a day at the time, if we close below these levels, by the way, we want to, that's the conservative entry. We want to come down to the next support level. Now, the space between these lines is pretty big. This is a $1.80 move from line A to line B, which is a banger of a trade, no matter how you cut it. And likely, we were looking for puts simply because we were trending down into the open. Guys, everybody wants to know about the call put scenario. Let me explain something to you very, very clearly. There's nothing special about the call put scenario. The put scenario is if we cross a line of support, we are expecting it to move down to the next support. That's it. So just find where your most recent support is leading into the open. If we get below that, we're going to assume that we're going to go down to the next support, especially if we're trending down into the open. Likewise, if we're trending up, we're going to look left. We're going to find a level of resistance. Say, well, if we get through that resistance, we should head up to the next one. If that's enough room for you to make money, that's the trade you take. Okay, that's only for the aggressive traders that want to play the open, which I do 99% of the time. And it pays well, and it lets me be done working early in the day. Now, I stay on the mic all day because I want to help other people who don't trade that way make money, but that's the way I trade, because my future, if I continue to trade after 5 years, is going to be done working 20 minutes after the market opens, the latest. That's the dream job for me. Now, the things that made this move a lot more comfortable to take, well, if you look at ADD, ADD was a historic thing too. We opened at minus 1,092, which we've done 1,000 times before. But guys, look at where it bottomed out. I don't think I've ever seen ADD at minus 2,634. I don't know how much lower it can go. In fact, I didn't even know it could get down to minus 2,634. With that said, interestingly enough, I was explaining to people as ADD starts to round off at the bottom, it doesn't mean we're going to go up, but it does mean that we've bottomed out and we just got to wait for it to start to rotate up before we start worrying about whether puts are at risk or not. Well, as you could see, we made almost like this weird, not a single green candle until the first one, which was right at the bottom of the U, and then not a single red candle until after 10 o'clock. Insane. However, so we had people take puts and played through support because ADD kept printing red. Right? And then if you're wondering when to go from puts to calls, the same rules that we always play, guys. Make sure we close above the trend line, and then make sure you take out the most recent resistance. And if we do, and there's enough room to the next resistance, you take the trade. ADD at this time started to print green. We broke resistance, or I'm sorry, we closed on the other side of the downtrend. We closed above resistance right here. The next resistance was right here. We made it right to it in a minute and a half. Right there, that move right there from 409.30 on the Qs to 411.91. These moves are big, okay? Now they pale in comparison when you look at what happened after that. From the bottom of this move to the top on the SPY chart, from down here to this insane move up here, that was over $40. Now, if you're trading futures, well, you were stuck in puts, you held and hoped you didn't lose your house on that. If you're trading options and you were holding on to puts, well, undoubtedly they hit zero, and they never recovered because we still haven't pulled back enough to even come close to break even, let alone green. But that there, insane move. And that all happened from 9:45 basically all the way to 10:15. So basically a 35 minute move of a $40 move to the upside. Now, if you, again, traded with no fear and you only traded the chart and you didn't care about the cost of the trades, or what's going on in the market as far as volatility and what's moving it and why it's so erratic and sporadic, hey, the rule for getting into calls was there. Now, I had told everybody in our community I wouldn't buy calls unless the Qs could get back through their pre-market high line. And I said that because we would have taken out a bunch of lower highs on the way up, a lot of resistances, and it's going to have to work to get up there. Well, as soon as we got to that line and through it, we made a $3 move straight up. Came back, pulled back a little bit. We were in a wedge, and the wedge, we don't get into trades during wedges, but you can't anticipate a move that came after that unless you got in because the wedge broke up and we got through this orange dotted line. We would have been aiming for the next orange line and then the pink line and then the orange line, all of which happened. And then we closed above it and we kept going. I mean, again, there were some people in our group that were in that trade, but you can't anticipate a move that big, right? You got lucky and it was awesome. And then we had a $20 drop in like 9 minutes after that. The market is out of control right now, but as things slow down a little bit, the normal rules, lower highs are bad for calls. So because of this lower high, which we talked about in real time, I said, guys, that's a lower high in the Qs. If things go the way they normally would, ADD was printing red. I said we should break this support and we'd be heading down for the blue line next. Now, it didn't make it down to the blue line on the first attempt, but we did put in another lower high. That one ultimately brought us down there. But after that, the people who were going to trade were already done for the day. We actually had a nice winning day in the community. I was not one of the winners or losers. I was a blue book today. And right now, the market is just expensive and it's doing funky things. So we've regained a lot of what we dropped in the morning, but we gave up everything that we had gained from the big $40 move up. And it's just kind of trading around where it was in pre-market. Pretty wild though. And with that said, we're going to wrap it up. I got nothing else here to talk about in the charts. I just need you guys to be careful, right? And the point of this video was to remind you that you have rules, right? And deviating from them only reinforces your willingness or your being okay with changing the rules to suit you, right? To suit your desires. And that's kind of a problem. Now, if you don't have feelings, good luck on that, or you have no worries or concern about losing gobs of money or making gobs of money, right? Today felt like if I were to trade, I would have felt like I was more gambling than anything. And I'm trying not to do that. Now, I found trades that would have paid me a lot of money. And I'm not even upset that I didn't take them because I had made that decision before the market even opened. I announced it to our community. I said, guys, I'll be here for you, with you, to talk through the charts as I see them, but I personally am not going to trade. Okay? And with that, I didn't. Now, before we wrap this up, I'm also going to tell you that somebody had suggested a video topic for me during that 5 series that I made over the weekend. If you haven't watched those, go check that out. 5 reasons you might be struggling to be a profitable day trader. Resonate with those videos. Okay? Be truthful with yourself. Because if you're suffering from any of those things, they're definitely a reason that you're struggling to progress as a day trader, okay? Here is the comment. This gentleman specifically said, basically make a video telling us why we want to do the opposite of what we know we shouldn't be doing, right? That's a great question. I understand why it happens, and I will gladly make a video based on that topic. So thank you for that suggestion. Lastly, I also finally got the ebook for The Art of Naked Trading uploaded to Amazon. It's under review right now. It will be priced at $9.99. So if you're interested in the digital version of our book, you will be able to find that hopefully within the next 3 days or less. I will make an announcement and a video when it does go live. And if you're interested in buying the hardcover or paperback version of that book, you can find it. It looks just like this. It's on Amazon. The link is in the description below. Guys, if you buy the book and you enjoy it, please consider leaving a positive review on it. I'd really appreciate it. I don't know what it does in the form of Amazon. This is my first book, and help a brother out. And that's pretty much it. So if you got any useful information in this video, please like, share, and subscribe. If you'd like, join our Discord community. Well, we'd love to have you. There's a link down below. And your first week is completely free. No signups, no nothing. Just show up in the community. Your free trial starts right then. By the way, when you get there, please navigate your way to the disclaimer channel where you have to click a little green check mark at the bottom of it. That is going to give you the role that allows you to join our live trading room. Okay, so please, if you join and you don't read everything that hits you in the face when you join that suggests you have to do that, hopefully you saw it here in this video. Okay, and yeah, so I hope you all had a fantastic day today. I hope you got to take advantage of some of these crazy moves in the market. If you didn't, don't be upset. Don't have FOMO. It's okay. The market will be there again tomorrow, and it will be moving a lot tomorrow, and actually for the foreseeable future, because, well, nobody knows what's going to happen, good or bad, how long it's going to last. And as long as that's the case, the market's going to be moving a lot. For every little headline or every little thing that gets said or tweeted, today's run-up was based on fake news. Somebody said that that we're going to pause the tariffs for 90 days. It was probably some hedge fund that was drowning in long positions, and then they had to get saved. Who knows? I don't put anything past anybody anymore. But with that said, you guys be good, be safe. Till tomorrow, I love you guys.